Right now in Canada, real estate is the least affordable it has ever been. Wages have not kept up anywhere close to rising expenses Canadians have encountered. Americans, Australians, and many other people from around the world are feeling the same burden of unaffordable payments. With rising interest rates, this will further push down on individuals and they will be unable to pay their debt. Who will be there to rescue them? You came here for the truth, so let me unveil that for you. Today we're going to look at real estate. First, I want to focus on Canada, then we're going to talk about the US. I'm going to connect them together and show you how important it is. This is a jam-packed episode, and it's an incredibly important one. I finally found some information that I've been dying to share with all of you, and I will start right away with that. This is a report out of RBC, and they had some very interesting information that I need to bring to you immediately, and that is housing trends and affordability. This is coming as of September 2018, so we're talking about brand new information. At the bottom, you can see it. Let's get into it right now. The share of income a household would need to cover ownership costs in percent. In Toronto, where I live, 76%. You spend 76% of your household's income to cover the ownership costs of a house. 3/4 of your money is spent on your home. If that isn't overpriced, if that isn't a bubble, I'm sorry, I don't know what is. I talk to people, 99.9% of people in Canada, in Toronto, who think that it's reasonable. Who think that because housing prices always apparently go up, this is still reasonable. Look at Vancouver, 88.4%. My goodness. And when you look at Canada as a whole, it's 53.9%. None of these are reasonable. Yes, we can look at an area like Edmonton at 28%. That is actually borderline becoming too expensive. That's borderline. Toronto, Vancouver, these are off the charts. So I'm going to cover this today and we're going to get into it further, but this is it. I've been just itching to find these stats and finally I found them for you. Rising interest rates continue to squeeze affordability in Canada. RBC's affordability measure hasn't been this bad since 1990. The ownership cost to carry a home bought in the second quarter of 2018 would have taken up 54% of a typical household's income. This is up sharply from 43% 3 years ago. So we saw in 2017 that was the peak of housing prices for a lot of areas, but the prices have actually gone beyond that in many cases. All right, unaffordability is off the charts in Vancouver, Toronto, and now Victoria. Interest rates have a big impact on these high-priced markets. The situation is much less strained in other markets, although affordability deteriorated in all markets in Canada in the past year. It's probably going to get worse as these interest rates rise. A lot of people do not care. A lot of people are not worried, and that's because they have this belief that they've been told by their friends, by their family, by their neighbors, by their media, by the people in the financial industry that housing prices always go up. And I assure you, one day, they are going to realize that that isn't true. You have to learn your lesson every so often. What goes around comes around. You reap what you sow. If you take on too much debt, you're going to get smacked in the face. It happens. It's unfortunate, but it happens. Okay? Nothing goes up forever. Let me repeat myself. Nothing goes up forever. Let's get into this further. Cost of owning a home in Toronto, Vancouver goes, quote, off the charts. The cost of owning a home in Canada is at the highest level in 28 years, and I would actually like to project to you that this is beyond what we've ever seen before. Not just in terms of the nominal value, sure, it's beyond that, but the wages have not kept up. So when you look at the expenses of a home, I think they far outpace what was experienced in, let's say, the early 90s there, all right? Carrying a home, including the cost of a mortgage, property taxes, and utilities, took up 54% of a typical household's pre-tax income in the second quarter, and that's up from 43% 3 years ago. From overheating to a correction to the onset of recovery, we've seen pretty much everything in the past 3 years in Canada's housing market, yet an eye-watering loss of affordability has been constant. And I like the way that they say that, an eye-watering loss of affordability. That's what's going on today. We are not able to acknowledge it because it's not cool. It's not really, so pretty to say so, but that's not why you're here on this channel. If you're here on this channel, you're here for the truth. You're not here for the BS, okay? If you're looking for the unicorns, there's the exit. All right. Now, this is further along in that report, all right? So just very quickly, it's too long to get into all of it. But interest rates, they're talking about it here in the first paragraph, talking about how that important they are and how that will put further burden on. They're talking about specifically Toronto and Vancouver here and how unaffordable they are in terms of the numbers I just gave you. Higher interest rates affected nearly all markets, all right? Whether we're looking at Vancouver, Toronto, Victoria, they basically priced people completely out, but they'll still be able to buy it. That's what a lot of people don't understand. Well, hey, the homes are still selling. The prices are still very high. We haven't seen a collapse. We haven't seen a crash because the price to get them right now in terms of the interest rate is still very, very historically so cheap. And that goes for Canada. That goes for the US as well. Things are going to change. They already are changing. People with variable mortgages have already felt it. And statistically, if people encounter a $200 increase in the monthly payments, they're crushed. That's a fact. $200 more, that's all. If their mortgage payments go up by just a little bit, that's going to crush them. Now, in Canada, I know it works different everywhere, but essentially most people are actually, so they get, let's say, a 25-year mortgage, but after a 5-year term, you then go back to get a new mortgage, okay? So it's the period at which you are spreading the debt out is 25 years, but the actual financing is negotiated at a 5-year period. That's the average. You could do it for less, of course. You could do it for longer, but that perfect rate tends to be around that 5-year mark. And so this right here shows us that a lot of people are going ahead with this, and at some point they have to refinance. Okay, that's just the way it is. There are some people who do 10-year and beyond, but it doesn't happen very often, I assure you, because they want the cheapest rate. And where are the cheapest rates? Variable mortgages. That's why people do that. Okay, so a lot of people are going for variables regardless, but even if they're not, they're doing so with this term that will eventually expire at some point in the future. House poor. Vancouver, Toronto affordability at its worst ever. This is basically the same exact thing, but showing you in a chart form out of Bloomberg. Look at that. Just look at that. And you could see it here. I mean, there's the 100% line. It might be hard to see, but this is your income. So I want to focus on the two on the left here. And you're seeing Vancouver and Toronto. It's basically everything. And then you tack on, imagine, you tack on your food, you tack on your, other expenses that you might have. I think utilities were included in that. But basically, you're overflowing, and then you have to use what? Credit cards. You have to use your debt. That's what people are doing, and that's how they get into problems. But hey, don't worry. Just pull the equity out of your home, and there's nothing wrong with that. That's what I've been told many, many times before. I disagree, but hey, what can I say? So this right here is the national price map, and I think that people on a monthly basis should be seeing this if you're in Canada or want to know about the Canadian prices. In the US, there's a lot of resources. In Canada, the resources, it's significantly smaller. But if you want to check it out, these are official statistics. All you got to do is type in the word CREA and then map. Okay, click on the first link. This brings you to the national price map, okay, the official stats. And I just compared the two of Greater Vancouver and Greater Toronto, and you could see what has happened. Yes, the prices have increased, but in Toronto, 1.4%, all right? Now when we look at Greater Vancouver, it's 4.1% year over year change. So they are increasing, but the euphoria seems to be over. But look at some markets, like on a micro level, certain neighborhoods, the prices are still just completely out of reach. But hey, they're still selling. Now, in terms of the total number of sales, that has declined actually quite dramatically. I just showed you a video a couple days ago, in fact, that Vancouver sales are down something like 40% from the year before. So the slowdown is clearly here, not maybe in terms of price, because they're just willing to let them sit on the market longer. You have people who come in, maybe it's investors, maybe it's a little bit of this and that, but ultimately this is what we see going on today. No 15% tax is going to stop them. Now, I want you to know something. A lot of people, particularly in Canada, have said countless times. I'm ridiculed about this all the time. I couldn't care less. This here is what we're talking about, that the Canadian market is robust. The Canadian market is strong. We did not receive bailouts in 2008. We simply skipped along with just a little blip. I'll tell you right now, that is a lie. If you go onto a search engine, okay, and go to videos, or you go on this website if you want, you can do it from here. Type in the Fed bailout Canada. All right, now I just noticed I have a spelling mistake there, but the Fed bailout Canada. All right. Look at the second link. Recognize that guy? That's me. I did a video showing you how the Federal Reserve bailed out Canadian banks during the financial crisis. It is a confirmed fact. Then Stephen Harper, the former prime minister, lied to the public, said it wasn't true. The finance minister of Canada at the time lied to the public, said it wasn't true. The documents revealed that Canadian banks received a bailout from the Federal Reserve. It was small in comparison to the big bailouts that occurred, the AIG and all this stuff, but it doesn't matter. It's a principle. Why didn't our own government bail out our banks? Why didn't that happen? Well, you tell me. Now, when we look at this, it's very important to understand the true facts, and that is the economy is not doing well. The financial system, the monetary system is a failure, and the sooner we realize it, the sooner we can get out of this mess. But that's not going to happen. But what can you do? Cash-strapped Americans are willing to leverage their homes to pay their bills. This is what I want to get into next. We're looking at the U.S. market. Now, this right here is basically talking about the U.S. household. They're increasing the amount of debt that they have. They can't pay their bills, and yet today we see them more cash-strapped than ever before. Home equity debt sees the highest interest rates since the financial crisis. Sure, we're not at the same level that we were leading up to the financial crisis, but give it some time. It's going to get there. Home equity line of credits are people's favorite way to pay for their garbage. All right. Looking at this, in a real estate market tinged with so much uncertainty, renting at more than $5,000, $8,000, or even $10,000 a month feels like a safer bet these days to a number of people who could well afford to buy in the suburban counties of Fairfield and Westchester. We're talking about New York right here. The places to buy the homes are $1 million plus, and they're saying, look, I'd rather spend $5,000, $10,000 a month because I don't know what the hell is going on in these markets today. And we can see that. We see the slowdown in sales that's going on in New York, and this happens to be just one example of that. All right, one more. This is the complete opposite end of the spectrum where you see it happens to be in Minneapolis, but essentially we're looking at places where people don't have homes to live in, and the poverty levels are just rising and rising. People are living on the streets. Massive, absolutely massive encampments that are everywhere. I've shown you the videos before of people riding their bike on through these encampments, showing you 10-15 minutes straight of just constant cycling and just tents everywhere. That, as far as I'm concerned, is partially because of what we can see here with this whole failed monetary system. And what are the solutions that they provide? That's right, give free housing to everybody. No. That just pushes the prices higher for everybody else. That isn't the solution. Fixing the problem at its root is the solution. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, that helps to support this channel, so I do appreciate it very much. And last but not least, if you want the financial education you were not taught in schools, well then, these two books have it all. You can actually take a look through the books over at Amazon. There's a link in the description. If you click on it, it'll bring you over there. There's a look inside feature that's going to allow you to flip through the pages of the books for yourself. And if you're more interested in the audiobook version, you can get that at themoneygps.com.